Good morning, everybody. Welcome to. Of course, it's gone. Good morning, everybody. Welcome to the Flow Show. This is the first Flow Show since the last Flow Show 24 hours ago. That one's for Mr. Brown and his highest since whatever headlines. Morning, Kay. Is this the latest you've been up since the last time you was up?
Oh yeah.
Oh no, you've gone again.
Here we go. Am I back?
Yep, you're back.
And we are going to reach fresh highs, mate.
Good. In what? Not hair. Uh, that would be the ultimate, but I can't see that happening anytime soon. Right, ECB day today. Oh, great! Looking forward to it, like a hole in the head. Um, you're off, aren't you? Are you off before or after the ECB?
After it, dedication, professionalism. I'll stay
Uh,
for the ECB.
yeah, wild horses couldn't drag me fast enough away from that one. Right, anyway, let's crack on. We'll talk about the ACB, ECB. Oh, it's going to be one of those mornings. We'll talk about the ECB later. Not that there's too much to talk about, but we'll get into it anyway. Right, so let's get cracking. Get rid of my ugly mug first. Where shall we start? Let's start in Japan with some labour cash earnings. I know you like to look at labour cash earnings. We saw a little bit of a dip compared to what was expected, or miss of what was expected. For April, 2.3% from 2.6 expected. Prior was 2.3, but that was an upward revision. Real cash earnings, though, this is the one that really needs to take off, came in at minus 1.8% year on year, which was worse than the estimated minus 1.6% and a revised minus 1.8%. Cash earnings year on year, though, came in at 2.6%, positive 2.6%, was expected to come in at 2.8%. The prior was 2.4%, that got revised up to 2.7%. So overall, we've still got positive numbers for pay and wages, but that real number, real earnings, still deeply in the negative, and that's something the BOJ will want to rectify or see rectified with further price or wage increases to come. How much is that number part of their reason for staying on hold, Kay?
Um, oh, well, that's a good question. I the Bank of Japan wants positive wage growth, right? And we have seen wages have grown. But the problem is that the real wage growth is always, or as barring just a few months, has not really been above inflation, and that may be an issue now. You can look at it from two ways. It could be the reason why they hold because of those wages, but it could also be the reason why they need to hike to try to tame inflation, bring inflation down in order to get the real wages positive. So it is really a double-edged sword, in my opinion. But yeah, usually, as we know, the Bank of Japan would err on the cautious side of things.
Yeah, yeah, very
So
much so.
yeah, hold is probably it. Especially that we heard from a few of them, and it does seem that Ueda killed the month of June, right?
Yeah, exactly that. And we did have a 30-year auction. You can just see down the screen there, which again had a low bid to cover ratio. So demand still not there for that, but it's as it's been for a while. So no change there. The surprise will be if buyers do come into that. Ali, just noting your comment, you're not against my trading book because A, I'm not in cable, and B, I'm long liquid as well via Euro Sterling. So I'm already short Euro Sterling. Bit of a messed up fixed trade that I'm still hanging on to, trying to hang on to. But I'll talk about that. Yes, I'm short Euro Sterling. I'll talk about that in a moment. Anyway, there's been a sources piece out from the Bank of Japan, as we like to get, running up to a meeting, but this is not necessarily concerned with the next meeting. The Bank of Japan is apparently going to consider slowing the pace of its bond tapering, so slowing QT next year. So anyone who's thinking they might do something soon, it doesn't look like it. What we might get at the June meeting regarding QT is maybe a jiggling around of what they decide to QT or get rid of. Instead of getting rid of the longer, super long end stuff, they might just focus on the shorter end stuff. The amounts probably aren't going to change in terms of how much QT they're doing. They're just going to tinker with the durations that they do that QT within. We've been speaking about that here before. Apparently, according to GG News, the US is showing flexibility on lowering additional reciprocal tariffs with Japan. We've still got pretty much every economic minister under the sun, trade minister, running around having meetings with the US this week. That's ongoing. So maybe Japan gets something done on that. It is said that they are pushing for a similar deal to what the UK has got on steel and aluminium and the likes. Some other data, a few bits and pieces out of Europe, some construction PMI data, which is all looking pretty crappy, except in Italy. Retail sales in Italy, though, was a positive 0.7% on the month of April. So good news there, turning around a negative and beating expectations there. We did have some German factory orders as well, which came in a positive 0.6, which is a bit of a surprise because we expected to fall 1.5%. Obviously, there's a lot of noise in here from all the trade stuff. We got Eurozone PPI as well. That coming in at down 2.2% on the month and is running at 0.7% year on year. Was expected to come in at 1.2. PPI can be a bit more volatile than CPI data, but it is on the disinflation bandwagon nevertheless. US data yesterday, and ADP threw a bit of a wobbler early doors, coming in at 37,000 versus 111k, 112k expected. The prior was a bit of a wobbler as well, 62k. That got revised down to 60k. So that's two numbers now we've got in sub 100,000. This is for private payrolls. Okay, so it doesn't count as much as the NFP does, but the market still took that on the chin a bit and gave the dollar a little bit of a tap on that. And we also had the ISM, which was a bit of a messy one to say the least. Went into contraction slightly. 49.9 was expected to rise. New orders doing a lot of the damage there, though we did see employment jump into 50.7, so moving into expansion, muddying the picture ahead of the NFP on Friday. Prices paid also saw a jump, so stagflationary numbers coming from that. And as I said, we soft ADP, and then we get services employment ramping in the ISM. So yeah, no one knows what's going to happen tomorrow at the NFP. Trump wasn't happy after that ADP number. He said Powell must lower rates. He is unbelievable. So apparently Powell's got to change rates on ADP numbers now, for what that's worth. Kay, just talking about jobs at the moment. We know ADP isn't really a good bellwether, except maybe for direction. But it's, in the mood the market's in. Bad news is hit harder than good news at the moment. So it's probably got a few people getting their razor out for Friday's numbers.
Yeah, especially that is a second second month on the trot. So that is likely why the market reacted to it the way it did. Yeah, I was a little well, I mean, those numbers are what they are, but that the ISM employment came back above 50 is perhaps still needing us to be a bit cautious to expect too much of a negative one tomorrow. So yeah, ADP, yeah, but 2 months on the trot. But we have been talking about it. It's been also discussed in our room a fair number of times. The most of the people who got at least on the government side laid off will most of those will probably show up in either August or the September data. So that's possibly one other factor that we need to take into account if we see a number tomorrow that is still defying the laws of gravity on in the jobs market. If in turn it'll become it'll be a weaker one, then I think the market is going to stick its teeth into that bone and think that now the jobs market is starting to trend lower. So, but I would still think that tomorrow's number is still a bit of a lottery.
Yeah, absolutely. I mean, no, we shouldn't be surprised the way that the data's been going, the way we've heard from firms. We shouldn't be surprised if we get a softish number, not a falling off the cliff number like a minus 150 or minus 200, but a softish number, because we know that firms are uncertainty. They're sitting on their hands a lot, and we should be expecting that. So yeah, soft one isn't necessarily a bad one, but it's a difference between falling off a cliff or just calmly trending lower. But as you say, bad news is going to be bad news for the dollar at the moment, however it comes. Right, Bank of Canada, they kept rates unchanged as largely unexpected and then expected, keeping rates at 2.75%. Reasons for staying on hold were high uncertainty and firm inflation. I said that underlying inflation may be firmer than thought. A rate cut may be needed if the economy weakens and CPI stabilises. They said that a robust Q1, or Macklem said a robust Q1 GDP borrows strength from the future. So sort of dismissing that Q1 data that we saw that was pretty good. And so they expect a much weaker Q2. Macklem said that they will be looking at the next two CPI reports carefully. They see some underlying volatility in inflation, but we don't want to focus too closely on 1 month's data. Rogers said that recent Canadian dollar strengthening had some effect on inflation, and they also hope to return to the practice of issuing a central scenario in July. If you recall the last meeting before this one, they basically threw their forecast out the window and gave two scenarios that may play out because of the uncertainty. So they're hoping in July they will have a better idea of what's going on. Two hopes of that, in my opinion. The Canadian swaps market now sees, after that decision, saw a 46% chance of a July cut and priced in 36 basis points of additional rate cuts for this year. That was versus 42 pips prior to that announcement. So they're shaving off of rate cut expectations moving forward. Fed's cash and carry says we're still not all the way back to 2% inflation target, and the labour market is showing some signs of slowing. Saudis onto oil. Saudis said that this is reportedly, they want more supersized OPEC plus production hikes to continue pushing for the market share. Now, as our astute Rumi, Mark, in our chat room pointed out, that news another time would have sunk oil, but it didn't really sink oil. So we've got a slightly different dynamic going on in oil markets at the moment. Possibly all this tension going on, Middle East, Iran, and all that sort of stuff, geopolitics playing out more than the supply-demand picture that might be turning out. Kay, you need to go to your closet, get your expert hat, because we've all got to be rare earth, metals, minerals, magnets experts now.
Well, I still have my My Japanese emergency pack somewhere in my garage, and there's a helmet in there. There's all kind of stuff in there. So I may have one. It's actually a folding one. I mean, in those days after the big quake, we all got those emergency packs, and there was like this kind of a folding helmet in there. Maybe I should look it up and then.
You have to dig that out, mate. You have got to dig that out.
Yeah, put it on and talk about half an hour about rare earths, where I don't know much about.
Exactly. Right. So just to bring you up to speed, because this is, we're getting more than a few headlines coming across this one. I mentioned yesterday in the news update about the Germans Auto Association, the VDA, moaning about how rare earth holdbacks and restrictions from China may help. Dearie me, I can't talk today. How rare earth export controls and restrictions may harm the autos industry and production. Well, yesterday, China introduced a national rare earth magnet tracking system, according to Reuters. So the new system will require exporters to list clients and sales volumes. So there are already restrictions in place, and they're tightening those up. We've had the US version of the VDA, the MEMA, which is the Vehicle Suppliers Association, wants immediate action over China's tighter controls on rare earth exports. Just to make you aware, China processes around 90% of the world's rare earths. So it's a big, big deal. Japan's Suzuki, and that's the car maker, not the ex-finance minister, has halted production of its Swift model due to these supply issues with rare earths. That's according to Nikkei. Ford CFO says rare earth supplies continues to be an issue. Tyson Krupp says rare earths used only to a very limited extent at their firm. They took measures at an early stage to diversify their supply chains and increase security of supply for these special raw materials. We do not currently see any restrictions on our production. So they're okay, but others aren't. And this is potentially going to become, or is, the barrel that China's probably going to hold everyone over regarding trade talks with the US. It's also why I think, and I want Kay's opinion on this too, we might get a bit of folding from Mr. Trump, because he wants all his cars made in America. That's all well and good, but if they can't because China's holding back on rare earth exports, that's going to put a bit of a kibosh on his plans, Kay. So could we see a little bit of folding, and maybe that's something to come from this Friday call with Xi if it happens?
Yeah, there was this interesting comment about the Japanese offering their services to try and make a deal between China.
You've gone, mate.
Dear me, how is that possible that it always drops away? I think I've got like micro cuts in my internet again, Ryan. Same thing I wrestled with yesterday on Face. Yeah, so they're going to need, and I think it's one of the reasons as well, Ryan, why Trump and the U.S. administration are so desperate to get G on the line, because he has the power to press the buttons, right? And for the time being, he's negotiating. The head of the negotiation teams is not giving them much right now. So, yeah, that is one of the reasons that it is. But I thought, was it not Australia also who had some of them as well? I
Yeah.
can't recall exactly. There were a few countries that they could turn to. But yes, of course. I mean, China is going to be a big one, and the way things now go, not only on direct trade negotiations, but even on the geopolitical side, with China being on the Russian side rather than the rest of the world. It's all going to make things a bit more difficult. It's all part of the whole package, Ryan. They need to get something with China, okay? And so they tried to bully China into onto the negotiation table, and China just broke the negotiation table and told them to go and look elsewhere unless US is scrambling back on stuff.
Yeah, absolutely. Yeah, it's this is the fun fight to come. So you need to know what's happening in the world to know how the market's going to react to it on a risk basis, at least. EU Trade Minister Sefcovic says trade talks with the US are going in the right direction and at pace. They also had a focus meeting with China's Commerce Minister and working hard to address issues and prepare for a July EU-China summit. Mexico's Shine Bomb says Mexico is to announce measures next week following the US steel and ally tariff hike. Measures will only take place if there is no agreement, but it won't be an eye for an eye situation. China's Ministry of Commerce spokesman Lin says there's no information to share on any Trump-Xi call, this ongoing thing for Friday. The Kremlin, speaking about further direct Russia-Ukrainian peace talks, says as soon as parties are ready, the dates of the next round will be agreed. In the meantime, they're all still lobbing crap at each other, and Russia's going to be retaliating for this sneaky drone attack that Ukraine pulled off the other day. That's it on the headline front, unless you got anything else, Mr. Key?
No. We can have a look at the ECB, mate.
Yeah, we'll have a look at the ECB. I don't know what we're going to look at. But anyway, rates expected to be cut by 25 pips today. So there's likely to be no surprises from that. We should see 25 pips deposit rate down to 2% and the respective 25 pip cuts in the others. Really, I've got very low expectations for this one. Maybe we get to hear something as to whether they're going to be on a bit of a pause from that point. Probably not. They're not going to pre-commit to anything, as they usually don't. This is a forecast meeting, so that's really what we've got to look for to see whether these forecasts come in much more bearish for the economy, lower for inflation, because that will give the market its clues as to whether rate cuts are going to continue or not. But yeah, I'm not expecting much from this, mate. Have you got anything to add?
Yeah, I think she's going to be a bit grilled on the potential early move to Davos.
Yeah, I think so.
No, but I think they will be now. I think they cut and then they will be on pause because they're getting close to somewhere the middle side of their neutral levels, and now they will have to see really what's happening on the trade side again, on the trade side of things. Looking at how the tone from the ECB bots, which we have spoken about already in prior meetings, has changed a little bit. Well, maybe, but I know they never pre-commit, but maybe they are going to announce a pause now. That's probably the best we are going to get.
Yeah. I think they're going to shift. If anything, they're going to shift to September because they love waiting for their forecast before they make rate moves. But I think also we need to keep an eye out for any sources that drops, between 4 or 5 o'clock UK time, because that will give us a hint as well as what they're going to do. But yeah, rates at 2%. I can see them maybe taking a pause. I don't know if they will explicitly say that. They may say that they might start coming to a neutral rate that they're going to be happy with. I don't know. It's all. I'm going to be more interested in what colour her tan is, what she's wearing, and whether De Guindos speaks, and whether I can spot Michael Brown in the crowd of reporters. That's going to be my main interest today.
I give you a clue on her clothing. If she wears a brooch in the form of a cuckoo clock, she's probably going to Davos.
I'll make a change from the owl and those bastard earrings she wore once. Anyway, let's not get into that scenario. We do have a few other bits and pieces to look for in the data. We've obviously got jobless claims, which has given us no clues about anything for months and months. But if we do get a wobbly one, again, that'll be factored into the NFP, even though it's different reporting dates. And just keep half an eye on the unit labour costs for Q1 from the US, expected to come in a bit of a hot one, 5.7%. It just all goes into the wages, inflation, costs basket when talking about the Fed and whatnot. So that's it pretty much on the data front. A bit of trade data from Canada, which will probably be all over the shop as well. David, where can you watch what? Unless I've missed an earlier comment. Yeah, let us know what you want to watch. Right, let's move on to a bit of price action. I'll look quickly at euro dollar. I know Kay's got a bit more involved in that. For me, I'm just going to be looking at the big levels. I'll be looking at 115. Should we get a move up there? And if anything down at 112, I've really not traded this at all recently because it's just been a bit all over the place. I've had no interest. So yeah, I'm just going to set my stall just on the wide and just show you the big chart. Let's go into that. So I'm just looking at seeing what happens between these two levels, 112, 115. And then we've got Mr. Blake's 116 above as well. So keep an eye on that. We're not too far away currently, 85 pips away. So we might be in the frame for that one. Euro sterling, Ali, you're in this as well. As I said, I think I spoke about this earlier this week. I got into a bit of a pickle shorting on this fix move on Friday. I shorted at 18 and I let it run all the way up to there. Didn't do anything, and now it's come down, and still haven't done anything. Haven't even taken any profit or whatever. We've got an interesting setup, though. I mean, I've pointed out this in dollar mex the other day, but on the inverse, where you get a high, a break, back down under the level. So yeah, a lot of people see head and shoulders and try and play head and shoulders in this. That's fine if that's what you want to do. That's not my bag, because I'm just looking at this, and this, that when you get a level that holds, tends to be a good opportunity to go with a rejection move on that one. I haven't added though at 30, so I'm still just faffing around in the middle. But we need to break down below this 84, 10, 05, 00 area that's been really sticky all week. If we get through there, we probably should get at least 83, 80s out of it. Whether it does any more, I don't know, because we have these little extensions through levels, but when it hits the next traffic point, it tends to run into trouble there. So it's going to either take big news from the ECB to get this one moving. If they do specifically announce a pause, we could see this moving back up again, but whether it's got the legs to go through 50s and 60s and whatever remains to be seen. If the forecasts are pretty bearish though, and they look like they're going to continue cutting, then maybe we see a downside move on this. But again, I'm not expecting fireworks on this one. Going back to euro dollar, K, do you think just over the ECB, do you think we're going to be in a bit of a buy the dip mode if it's a dovish one?
Yeah, I mean, based on what's happening in the rest of the dollars, I'd be tempted to say yes. Unless they leave a door open to like a clear open door to further cuts, in which case euro dollar could come off, and then it's going to weigh. I'd argue that it's going to weigh more on the euro crosses than actually on the euro dollar itself. But yeah, you know what, I'm hesitant to think that we are going to break into new ranges that we have seen over the past sessions. I don't think the ECB, unless they clearly say we are done, but they will never say that, right? But they can announce a pause. In that case, euro dollar should tick up. But do we break 115 today, ahead of tomorrow's US job report? It's a big it's a bet I'm not willing to take, although I'm like, it's part of my dollar shorts. I'm still long euro dollar, but um for different reasons as well than the ECB. But does it have the power today to break up? I mean, that's in my opinion a bit of a big ask, because we will likely have, compared to the prior reports or the prior outlooks, another revision of lower inflation. We will not have, I guess, not too much of a better growth outlook. That's where maybe where the surprise could come from. But I don't see the reason why they should all of a sudden start to revise their growth outlook much higher. But that may be something that pushes it. But I doubt that today's ECB has the power to break fresh ranges. I mean, okay.
Yeah, no, I agree with that. I mean, that's, there's no mistaking this is a very bullish trend that we've had all year.
Yeah,
So
yeah.
can 115 break? Absolutely, absolutely. Can it break? And we wouldn't be surprised if it did break. But like Kay says, can it do it today on the ECB? Can it do it tomorrow on the NFP? Who
I think
knows?
the combination of both, yes.
Yeah, absolutely.
But
But
one ECB standing alone, I mean, it would be great, of course, for my position. But I'm not taking into account that today we break 115, for instance.
yeah, I mean, I like 115 as a big level for a potential short. But if we're trading at 20 pips off it going into the NFP, I'm not going to touch it.
No.
But if we get a break over something like the NFP, but it comes back pretty quickly after and then starts to hold, that might be another question altogether. But there's levels and there's trends, and if we do break 115, then that might actually be something to go with rather than to fight. So on that side, if we get a 115 break, retest and holds, then I will probably be looking on the long side from that one. So I hope that answers your question, Nuno, as to whether the ECB press conference can get euro dollar out of range. Yes, it could. Is it likely? We're less sure. And Rob, you just highlighted silver copper is smashing higher. That's helping the Aussie dollar go through, which I'll let Kay have a look at as well. I think that's probably all tied to this rare earth stuff coming in the market, getting a little bit antsy. And if it's rare earths, it's commodities in general, precious metals, the whole thing goes in the basket. So that looks to be what's driving the Aussie dollar at the moment. Another one I'm just looking at, which might be in a bit of trouble, is the old loonie. We hit my 136.50 level, which if I go into a cleaner chart, I'll just show you what my eyeballs see. This is an old level that we've messed around with plenty of times before. One of those levels that when you get down to it, when you've been away, you see a bit of action around it. It goes back even further than that, 136, big old level here. We had a little test yesterday. The bounce hasn't been awful or awfully great. Getting up to the 80s, just the underside of that trend line. We're now knocking on the door again. So I'm long a little bit down here just to give it a try. I may start folding if that goes. If we do break there, it's probably, let's go back to this one. It's probably going to see a fairly quick trip down to this zone down here, 135.80s, 136.10, 15. It's another ye old traffic zone that we've messed around in previously before through 2024. So that's going to be the next big level if we get down there. So keep your eye on that one. One more, then I'll bang it over to Mr. K. Just looking at the clock. If you trade in the old Salma, let's go into this one. We've made a new low yesterday, not by much, 3 figures, little figures if in dollar mex terms. But what it's shown is that we're still willing to break down and just keep the trend going that we've seen since the break of 2019-80. So this one is still looking fairly bearish, but it's creeping down towards the main level. A lot of us are looking at 19. However, we've had this little move under. It hasn't lasted. We're now holding these lot of prior lows here. So that will give buyers a bit of confidence for the potential for a bottom to form, because this will be, compared to the rest of the trend, where we've made lows, bounced, broke, bounced, broke, bounced, held, bounced, little break. Now we're holding. So maybe something's changing here in terms of seeing a bit of bottoming going on. What are your thoughts on this one, mate?
Don't change your winning team. Sell rips, buy dips. I'm base short, and I'm just continuing to do so for as long as we keep under that. What is it? 45, 55. And
Yeah,
that's just it's mix. As you say, 300 pips is nothing. It's just that's 12, 13 pips in euro dollar. So, but it's still an emerging market and currency with its lesser liquidity than in major pairs. So we still need to allow for a bit bigger moves, but for the time being, uh, it's never. We shouldn't be saying that. We shouldn't get complacent, but it's a fairly simple trade still.
yeah, I think so, mate. Right, I'm going to chuck it over to you for a couple.
Thank you. So let me go there. Yeah, I'm sorry, but since I made you host, Ryan, I can't really reply to people. I can only reply to hosts and panelists in the chat room. So
Oh,
Ali and all the other people, I can't really reply to you right now. I don't know why. Maybe that's some Zoom restrictions or so.
have a look. Have a look now. I've just made you co-host.
Yeah, but actually I was just planning to put on the NFP thing again, Ryan. For the people to continue to vote because Brian was asking about the prices
All right, I'll do
and
that now.
stuff. Yeah, check it out, mate. Yeah, so euro dollar it is again the 115 115.70. If really we break above 115, and by the way, I'm going to be off, so I'm going to talk about the combination of ECB and the jobs report. If we don't get a jobs report, that is really bullish dollars. I think if you look at the overall action that we have right now in the global dollar, so it is for the dollar to weaken a little bit more. I agree with Ryan. We need to get above 115 and hold it. For me, really, the next level, bigger level, is going to be that 117 and a half. That's where I think because we've seen around that zone, we have seen different levels as well. It is a 78.6. I think this has a pretty big target on its back. Because if you look at it really very longer term as well, I think this 117 and a half also shows up. So that would be somewhere a target that I look at. If you look at the intraday, um, over the ECB, I would say start to look at well, 114 is too close for comfort, but I quite like this 113.60 the other day. That was yesterday actually. That held pretty well, which also pushed me to add a bit to the longs as people know in the room. Um, that is already a pretty decent intraday. So you're looking at basically from where we are. Okay, you've got the 114 and a half, then we can accelerate to 115 potentially, but you're looking at like 70, 80 pips each side of this. And if I quickly look while I'm talking about the euro dollar on the option front, if you look at the euro dollar, the overnight is about 70 pips. Okay, so you're talking about 70 pips above, 70 pips below. We should see option interest, which means in theory that we might just stick in the range over the ECB. But I would say in the current context of everything that we see in the dollar, I would say we will find bits on dips again in the euro dollar unless ECB goes all bananas on the dovish side. But we heard from the hawks and some of the doves even that they are willing to go on a pause. Cable is still 136, the big hurdle, right? The big hurdle is going to be 136, but we are again on the approach. Intraday, there's not much. Well, yeah, you got the challenger job cuts and those claims, and what Ryan spoke about as well, the unit labor cost. So it could be that we are going to push through to the 136. Will it break today? I think the big decision time for that should be tomorrow as well. Intraday support levels 135 and a quarter, and then if that would not hold, 135 the figure is one as well, but keep an eye on this one here. I would say 134.80 down to 134.65. That is what should hold now. We have regularly moved higher those levels, and I think it's moved up just that little notch as well. It's a prior high as well. So keep an eye on that zone here, 134.65, 134.80, if you would get setbacks, okay? If this thing breaks through 136, then it should bring us a lot closer to what is happening in the 137 and a half, 137 and three quarter zone, okay? So 136 is not only prior highs, etc. It's also this trend line here. If we get a break, we could see a bit of an acceleration. What's somebody was talking about a different pair here. I'm just trying. No, I can't find it. We have to look at the metals today. I know that Frederick is looking at platinum and stuff like that, but all the metals are flying. Copper is also going through $5 right now. That is also supporting, of course, the commodity currencies. Logically, so we are seeing the Aussie push through, Kiwi push through, well, trying to at least, at a snail's pace in the case of the latter one. And also perhaps one of the reasons why the Canadian dollar is back getting a bit stronger as well. But the metals are all flying. Yeah, platinum is flying, silver is flying, gold is retesting. We are back above my bit of a resistance box there, but I would still like the confirmation through 34 to say we're going. But it's again, it's bit. There is no reason, barring if you want to play those really short-term setbacks. To me, there's no reason at all to be short the metals right now, especially, and this is a weekly, okay, that we are trying this weekly break here in silver, all right? I said already a couple of times, and I did add the other day around 33, and I've been well, like scaling down, and I've scaled down again a bit ahead of this level, just above this level as well. But we are in an attempt to break the weekly 61.8, okay? And this is crisis highs or post-crisis highs in 2011 down to the lows that we saw in 2020 on the COVID scare. We are at the 61.8. Okay, all those high lows are maybe debatable, but I'm taking these levels anyway. We are on the 61.8. This is important, okay? And we are breaking on silver. I think this is important. It's a weekly, so we have to see where we end the week tomorrow, okay? But if this holds through tomorrow, I would not be short. I know some people have, I think it's actually Gregor on his wave count has a 36 target, potential target in there. Could be. I don't have it on mine, but I'm looking at stuff in a different way. For me, if 35 holds to close the week, this is big for silver. All right. I still have my long term, but I would really tell everybody to watch this 35.15. If you want to, you can just use prior high as well, 34.80, because if we're back below, it's probably been a blip, and we go and we consolidate again, and we could see a bit lower levels again. But if we are above at the end of the week, I would be very careful for next week, because we could continue just to go up. Okay. What else, guys? Pop. Aussie, as I said, yeah, it's enjoying the ride, the copper ride that is now above $5 as well. We are above 65, but I still would like confirmation that we are going to see this move higher. I don't know whether today's US numbers are big enough to do so, but maybe just the metals continue to fly, copper continue to fly, commodities continue to fly, will for sure underpin the Aussie. But we're still in the channel. It's a positive channel. And yeah, I think we can. I think we can. And then if towards the end of the week we're getting closer to or we are around 65.5 or so, these are 61.8, so that could be an interesting one to watch. 65.5, 65.60, maybe there, top end of this channel, interesting to watch as well. Kiwi, are you finally breaking this level? Tell me you are, because some of us are really waiting for that. Again here, 30, 40, 30, 42. The level in the Kiwi, it's trading 60.5. It is positive, but it's a daily, this one. So look at look at whether this holds again. All right. In prior attempts, it did not. It is an important level. I think if we can close the week above, we are going to perhaps have a little look at what's happening in this zone here. But 60, 30, 40, it is relatively simple as a level. Okay, so this is what I would say to monitor on this one. Okay, and with that, Ryan, back over to you, mate.
Thank you very much, sir, and have a good trip tomorrow.
Thank you.
Or later on today, and we'll catch you all next week, mate. Thank you, everyone else, for coming to the Flow Show. I'll see if I can drag a few people on while Kay's away, just so I'm not talking as much. Keep you all entertained. So have a good one. Take care later on for the ECB. Have a good day's trading. We'll see you tomorrow.